Ladies and gentlemen, welcome back to the channel. I hope you guys are having a fantastic day and you're ready to get into another jam-packed video. So, on one hand, we're going to talk about tomorrow. We have some economic data coming out tomorrow morning. Tomorrow is not the big day for economic data, but it still will be important. And then we're also going to get earnings. Tomorrow is what could be the most important single day of earnings. And could really guide the markets. Now, we're seeing some alarming trends here with earnings that we have seen so far. About 60 S&P 500 companies have reported out of 500. So we still do have a majority that need to report. But what we've seen from the ones that have reported is not so great. So we're going to get into that. We are also going to talk about AMC Stock, what I expect from here, the technical levels that I am watching, and just what could happen to our markets overall throughout this week in the next coming weeks, as well as AMC Stock. So if that sounds like something you want to be a part of and you want to hear about, hit that like button as well as subscribe to the channel. If you guys want to come trade with us live in real time as well, every time I make trades, I send out alerts. Consider joining the trading community. Now, first things first, guys. If tomorrow is bad with earnings, well, technically, it's tomorrow after hours. It's going to be the big time to be watching. That's going to set up for a potentially disastrous Wednesday. And that's really what I want to start with here in this video. If you look at this picture, it's from Bloomberg Intelligence. S&P 500 firms that miss EPS sales estimates get punished. This is the one-day move in stocks that beat on Q3 EPS sales in excess of the S&P 500. So EPS, your one-day return on a beat is like nothing, right? It's still a little bit negative, but it's not terrible. Your one-day return on a miss for EPS is over 3.5%. For sales, if your one-day return on a beat is not great as well. It's a little bit worse than EPS. And it's roughly similar for your one-day return after the miss. About 3.5% down. Now, EPS and sales. This is really astonishing. So, if a company beats on EPS and sales, there's almost no reaction. Almost none. If they miss EPS and sales, you are seeing an over 6% decline on average. Holy guacamole, that's insane. Like, that is not good. And I think the markets are in a very particular moment in time where we just have so many things going on, guys. We have bond yields soaring because nobody has wanted to touch the bonds. Besides today, investors bought the bonds. That's mostly because Bill Ackman said he was covering his short. There's a lot of geopolitical risks out there. There's a lot of, I guess you could say, data that maybe is not aligning with what the economy is actually doing. During times of fear, during times of uncertainty, before you go into a recession, investors buy the bonds. So they've been selling the bonds recently, again, besides today. So we've had this notion of higher for longer, really higher forever, eating its way at the bond market, which bonds falling makes yields rise. So investors really have not wanted to touch the bond yield. So you have that going on. You have the Middle East situation. You have safety assets that have been doing well this whole time, like gold, oil, even the dollar has done well. The dollar is up big time from the start of Q3 until now. FX, foreign currency conversion, is going to be a big story this earnings season as well. So you have all of those things happening. You're heading into earnings. The economy is probably heading into a recession. I think that's pretty fair. All of these things are just not great for stocks. So if you miss on your earnings, it's sell first, ask questions later in this market environment. So tomorrow, pre-market, you're going to get Coca-Cola, Verizon, GE, RTX, 3M, ADM, Spotify, Next Era Energy, Centene Corporation, and GM. I personally have a bullish trade on RTX. They're in the defense sector, aerospace sector. They make, defense missiles and battery systems, things like that. And that's probably going to be in demand. I look at that trade as, they've had a couple bad earnings now. The stock is down big time over the past, 3 months, the last year. Could you see a bounce there? Is that logical? Yeah. But also, if this situation gets worse with Israel and this conflict in the Middle East, if that erupts into something larger, defense budgets are going higher, and that's going to be good for RTX, and you probably see some money flow into RTX. RTX was up almost 1% today in regular trading, up 0.34% in after-hours trading, so some money did flow into this name today. At one point, it was up almost 2%. So, definitely did better than the broader markets today. But really the big story is going to be Tuesday and after hours. Microsoft and Google are going to be reporting earnings. Now, I think, let's just be honest here. Let's just cut to the chase. Microsoft and Google are 16.4% of the market weighting in the NASDAQ. Meaning, just for a little bit of context here, if Microsoft and Google both dropped about 5%, that would pull the NASDAQ down about 0.9%, about 0.8, 0.9%. Not to mention any drop you would see in an Apple or any other stock on a sympathy move to that. So if you get downside here in these two names, it's probably going to drive the markets for the rest of earnings season. You have a lot of other companies that are going to be reporting earnings, but they're not companies that are really going to save the markets. Even a Meta. Meta's not going to be the company that saves the market this time around. They're advertising. We get it. Advertising is doing a little bit better at Meta than maybe it is for Snapchat, or, some companies are doing better than others, but based on a market weighting dynamic here, Microsoft and Google being on the same day is very important. Amazon on Thursday, it's not going to save the markets, but it could help the markets if they have good earnings, assuming they do have good earnings, which I have no clue how Amazon's numbers are going to be. I don't think the consumer's doing all too well, so they're probably not going to be good, but Amazon really makes their money off of AWS. Amazon lost money basically forever on their e-commerce business. They never really made much money on that. It was always AWS that is the cash cow for Amazon. So I don't think if I were to go out on a line, Amazon's going to save the day. Enphase, Intel, Ford, Royal Caribbean, UPS, Hershey's, Altria, Chipotle, IBM, ServiceNow, Boeing, Thermo Fisher, Visa, Teladoc. None of these companies are going to help the markets or save the markets if a Microsoft or a Google has bad earnings, or maybe even both of them, or maybe they have fine earnings. I don't know. We'll have to see. They're trading near their all-time highs, so it doesn't seem like they're going to have impressive enough numbers to break out to new highs. If they do, well, Microsoft and Google are likely hitting new all-time highs. So do you hit all-time highs, or do you come down off of your already almost at all-time high, price? You probably come down on a statistical probability. So that's going to be important coming tomorrow. You are going to have some economic data as well. Again, it's not the big day for economic data, but there will be a couple things. 9:45 tomorrow morning, you're going to get S&P Global Composite PMI for October. You're expecting 49.8. Anything under 50 is contractionary. Last month was 50.2. You were pretty contractionary in 2022 on this metric, and now you're expecting to go into contraction again for the S&P Global Composite PMI. You're also going to get the S&P Global Manufacturing PMI, expecting that at 49.5, so that would be a deceleration as well from last month's number. S&P Global Services PMI, expecting that to also go negative under 50, and you were negative here towards the end of 2022, but 2023, not so much. You have definitely seen an increase in all of the PMIs, and you're apparently going to see that pull back quite a bit. Now, Richmond Fed Manufacturing Index is expected to come in at -1. You've been negative for a long time. That's where you've probably heard like this rolling recession. Manufacturing has been in a recession for a while. There hasn't been a lot of manufacturing going on out there. Richmond Fed Manufacturing Shipments Index is supposed to come out at around 2. for the number, and last month was at 7. Richmond Fed Services, you're expecting a 1, and last month it was a 4. So you are expecting declining data here. Does support that maybe the economy is not as strong as some people think, and that could be good for bond yields. That could help bond yields fall, which has a possible bullish outcome to our markets. Now take a look at this article. It says AMC stock sees high volatility amid a mixed bag of news. AMC shares have been whipsawed by both bullish and bearish news over the past several weeks. AMC CEO Adam Aron faced a reputation crisis after it was revealed he fell victim to a blackmail scheme involving catfishing. AMC shares sank 14% on the news. Taylor Swift's concert movie, The Eras Tour, was a success for AMC. Early ticket sales results prompted a 10% rise in shares. The film, distributed by AMC, achieved record-breaking numbers, though did fall slightly short of initial estimates. AMC stock continues to exhibit high volatility. The company is set to release its third quarter earnings. Analysts see earnings getting a boost from strong box office performances thanks to blockbusters such as Barbie and Oppenheimer. Now, I've said this before, but I just want to make sure everyone is on the same page. AMC stock, you've seen a lot of good news. Like people have been very, I guess, in awe and shock that AMC has not reacted positively to all of the good news that we got. Like when AMC turned a profit last quarter, nobody cared. The stock was, I believe, up like 1% that day. It might have closed down that day. It was not a big move for AMC. And that's because we had the court proceeding going on. So now that that is over, now that you're seeing a put to call ratio on AMC that is lower than what you're even seeing on your big tech names, I mean, that's really good. So AMC's put to call ratio is 0.74. Let's look at a Microsoft that reports earnings tomorrow and see what their put to call ratio is. And if we take a look, put to call ratio of 0.94. The lower, the better. The lower, the more bullish. Okay. So AMC is even more bullish than Microsoft as far as the options. Now, I think it is worth noting and looking at Microsoft's option activity as well, considering they have earnings tomorrow and after hours. Today, you did see a lot of positive order value in Microsoft. You had 103 orders totaling $49.82 million, positive order value of 87%. That does suggest that maybe, Microsoft can have some good numbers. If you take a look at Google's numbers, look at the option activity, 0.81 for the put to call ratio. So AMC is still even more bullish than Google. You've seen 63 orders totaling $13.2 million today with a positive order value of 63%. So not as bullish, but still overall pretty bullish heading into earnings. And again, both of these companies are near their all-time highs, just a couple percentage points off of all-time highs. So good earnings report, well, could break you out to a new all-time high for these stocks. Morgan Stanley's Mike Wilson says the next rally attempt will fail as investors are pushing or punishing earnings reports. And basically they're looking at the same data we're looking at here, but they're just looking at the overall reaction after earnings. And you could see the median S&P 500 stock relative price reaction T+1 days post reporting earnings. The average move is now negative 0.8%. You have not seen anything like this in a very long time. So stocks are just falling based on earnings. Really good or bad earnings, the average reaction is really bad. Now, as you can see, let's see. Sales EPS tracking by sector, the actual versus Q3 expectations. So a lot of numbers are actually beating and coming in better than expectations. So far, tech is around a 7% average beat, utilities at 6%, industrials around 6%, discretionary about 5.5%, staples around 4%, healthcare around 4%, materials around 7.5%, and financials at a 9, almost a 10. Financials are actually beating the most, and those are getting whomped. I mean, slaughtered. Whatever word you want to put on it, doesn't matter. Like some of your regionals, some of your banks actually beat by big margins and still got absolutely punished. So I do agree with what he's saying here. We'll definitely have to see tomorrow, though. It says Wilson said it was positive the S&P 500 dropped below its 200-day moving average on Friday. We would not be surprised to see a further move lower in price this week below the early October lows before the next attempted rally. However, based on our views on earnings, valuations, and policy, both monetary and fiscal, we believe the S&P 500 will have a hard time getting back above where we previously were at levels of support between 4,300 and 4,400 tactically, he said. He said it's more likely the index will catch up to the average stock performance than the other way around. So he's comfortable with a 3,900 year-end target. Considering the S&P is at $421.51, that would be a drop of about $31 and some change into the end of this year. And according to Mike Wilson, he thinks earnings are going to be a big catalyst for that continued drop. Let me know what you guys think down below in the comment section. Is that going to be the reason why stocks continue to fall, or could it be something else like this Middle East crisis situation? Now, let's take a look at AMC stock. So AMC stock was up 0.88% in regular trading, up 0.22% in after hours trading. I love you too, girlfriend. Your 8-day moving average is your real level of resistance here. You're finding a lot of resistance basically day after day. 1, 2, 3, 4, 5, 6 days now. You're bouncing, like getting rejected right at that level, like literally every single day. Like to the penny. It's actually crazy how much algorithms control this stock. But you're still closing towards the higher end range. You're not closing near this downtrending line. You're actually pacing the gap and making that gap larger over the past, couple of days. Notice how it's, 6 days ago, there was just a tiny gap between this downtrending line and where the stock closed, and it's been getting wider. The divergence here has been getting wider from this line. So I do think that sets us up for that breakout higher. Now, when does that happen? Why does that happen? Probably it comes down to earnings. I think a lot of fears are baked into AMC. This is going to be the first earnings that we have gotten since AMC has been crushed down into the dirt. There's a decent chance that you get some really good earnings, potentially even a surprise profit. I wouldn't be too surprised in that. Wall Street definitely would be, and that could send the stock up big time. I do still think just overall, you really need to see a big correction here. You've overcorrected to the downside. It's time to correct to the upside and get back to a more normal range. I think a respectable normal range for AMC is probably $20 to $30 to be trading at, not $9. And even statistically, we talked about this in the last video, but anytime you hit 30 or especially went under 30 and got oversold, you always made a move towards 70. Almost literally every single time. If not, you got to like 68, 69, and sometimes you way overshoot that during, big rallies. But every time you have hit 30, you have risen to 70 or more. Literally every single time. Now you were at, 23, 22 on the RSI, and now you're at 42. That's not the extent of this rally. This rally is going to get much bigger before we take another breather. And I don't know. I think there's a chance that AMC stock could do well if the markets fall. Overall, I think AMC is tracking the markets right now. Some days are harder to tell than others, so it's really a wild card. Let me know if you think AMC stock is going to track what the markets do and maybe like outpace the upside or outpace to the downside, or if AMC will start inversing the markets like we had seen AMC doing for a while. Let me know what you guys think about that down below in the comment section of this video. But again, what we've seen today was treasury yields coming down, and That's exactly what we've seen in after hours as well. TLT down another 1/4% after, well, being up another 1/4%. And TLT was up 1.2% in regular trading. So it looks like yields are continuing to fall. The algorithmic effect is clear. You can even see this in after hours. The S&P was up 0.26%. TLT, again, was up about the same, up a quarter. So you're getting this reaction with the algorithms. Although bond yields falling is great when bond yields have risen so much, it doesn't mean you're home sweet, sailing at this point. It's not a good thing if yields are falling and investors are buying the bonds because economic activity is slowing down or there's geopolitical tensions. So in the short term, today, tomorrow, maybe this week or next week, the markets could look at bond yields falling as positive, but eventually markets are going to say, hey, why are bond yields falling? Should we be a little bit more concerned with our equity exposure here? And that's when you really have a bigger problem on your hands. But again, tomorrow is probably going to be the driving sentiment of earnings. Even if you get a beat from Microsoft and Google, they're trading near all-time highs. So is that even enough to get a continued rally in those stocks? I really couldn't even tell you. If you take a look, go Microsoft, put that bad man jam in there. You're trading very close to all-time highs, right? Your all-time high was 366. You're at 330. You're not too far off your all-time high. So earnings would have to be pretty good to get you to that all-time high again. For Google, same thing here, trading near all-time highs, virtually no pullback here. You're just within, $10 or so of an all-time high. It's just not the most ideal position to be in heading into earnings season. There's probably not a lot of bad news baked into these stocks right now, guys. So those are kind of my thoughts, my opinions on this situation. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. Let me know what you think about all of this information. And just again, if you guys are curious why we didn't run through all of AMC's numbers, they're exactly the same as the last video. Pretty much. You have calls in the money about 10,000, calls out the money about 62,000, puts in the money 8,000, puts out the money 28,000. The Ortex data is literally identical to what we reported earlier. If you guys did not watch that video, well, quick little recap. Short score 57, $135.55 million worth of short positions, 7.55% estimated short interest of free float. Free float out on loan 10.61%. Shares out on loan about 21 million. Days to cover 1.11. Cost to borrow 1.31, and utilization of about 44. So nothing too crazy here. And if you take a look at the cost to borrow fees, that's probably the biggest change you're actually seeing. Cost to borrow fees in the last video were 6%. Now they are almost 8%. So a little bit higher on those cost to borrow fees. That is obviously good news for anyone that is looking for those cost to borrow fees to rise. And I think they will heading into earnings, and especially after earnings. The risk being short in AMC is going to become a lot more prevalent as we do go through time here, and AMC starts to react to some of the good news where it hasn't been able to over the past year with this court proceeding. If AMC gives you another profit, the stock probably goes up 40% right after that. That would be my expectation, at least. So that's it for this video. Thank you guys for watching. Again, if you guys want to come trade with us live in real time, I send out my trade alerts. We did make a couple trades today for earnings, one on Intel as well. Intel got some pretty bad news as far as competition is concerned. So if you guys want to come be a part of the action, link down below in the description of this video. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.